Today we are talking about payroll taxes, what every business needs to know. And there is a lot. You can really get in big trouble.
Well, I guess if you don't have employees, you don't need to know this too
That's
much.
true.
Okay. All right. So not every
almost
business.
every
Right.
business
Almost
needs
every
to know.
business. Yeah.
The first thing we want to talk about, what are payroll taxes and how do the problems start?
Yeah, there's some sneaky things in there. You know, that federal government of ours, pretty sneaky, pretty smart. Some devious things they do.
Yes,
some
the
trickery.
history is pretty interesting.
Yeah.
So before the 40s, taxpayers who owed federal income taxes paid them the following year in quarterly installments. But that didn't work out so well.
Yeah. Because what happens there?
It's easy for you to go, no,
I'm not going to pay that. Right. Well, and the thing was that the income tax didn't apply to a lot of people. So there's very few people it applied to, and usually they would have easy sources of collection if they didn't pay. So now, well, what happened with, they expanded the tax base. The promise was the income tax was only going to be for those rich fat cats to pay for free love and everything that we were going to get. And wouldn't you know it, the government lied. And it said, well, thanks for that. Now we're going to expand the tax base instead of the rich. Everybody, because you're all rich, because you're in America. So expanded to all these workers. And, you had a lot of people working in factories during World War II. And then all that was going to happen is you're taxing people they're never going to pay. And the thing is your income taxes, when your tax is a percentage of what you make, that adds up really quick, right? A few years, you're like, well, I owe more than I could possibly pay off, right?
Yep.
And the people don't have the assets, so the government didn't want people to get behind. And they're like, how are we going to do this so we get our money? And then we'll say, we'll make employers responsible for collecting the withholding. And then the employers, we have fewer employers we have to go and police.
And they have more at stake.
Right. And so that's sort of how that whole thing happened, because essentially your own government, Mr. and Mrs. America, thinks you're dishonest and won't pay your taxes. And so they offload your responsibility onto your employer.
And then the Medicare tax was added in 1968?
Well, no, that's something different.
Okay.
Your Medicare and your Social Security are something a little bit different than your withholding taxes. Okay, those are your employer taxes. Okay, and these are taxes, and just think about it like this: it's about 7% with your what the employer has to pay for the privilege of giving someone a job.
Right.
You have to pay a tax. I gave this person a job. I'm going to have now. You're going to pay a 7% tax on what you pay them. Instead of getting credit, hey, way to give this person a job.
Yeah.
Thanks. Right. No. You can hand it over. Hey, if you can afford to hire them, you can afford to pay us more, right? I mean, there's the brilliance of the U.S. government, who always wants more and more. So that's sort of where the payroll part, there's two parts to it. There's that withholding part. That is really the employer, the employees, what you're withholding for them.
Yep.
Okay? And that's their money that you're going to give later. And then there's your employer's part, which is your privilege tax for hiring people. And so there's the two parts. Now, where it gets now, do you think people understand that? Because I want to add in a bit of confusion.
Okay.
But it's important.
Okay.
Employees are responsible for half of Social Security and Medicare.
Okay.
So that is part of what the employees pay, because you could have someone looking at their paycheck. That's nonsense. I see deducted from my paycheck this, and so you're saying the employers are paying. That's not true. I'm going to call my employer and say, why are you deducting this? Because you're paying half of it. Your
50-50.
employer's paying it for the other half. So it's about 7%, 8% is what your employer is paying. And so you got to think about that. Your employer's paying you whatever an hour. You're being short.
Right.
You're being shorted because it's a hidden tax. And that's why they dumped it onto the employer. So it's hidden. And, when there was a reduction in employee in the FICA and Social Security, they dropped it. They dropped it on the employee side, so the employees would see it and say, "Hey, government, way to give me a break." They didn't touch the employer side. They're like, no. We like that money.
Yeah. Who's going to fight that? All right. So what about trust fund versus non-trust fund?
Right. So here, and this is not the fun kind of trust fund.
No.
This is not a fun kind of trust fund with
Uncle Rich passed away, and he left me millions of dollars.
We'll be dancing on patio furniture sort of trust fund. Now, this is now with your withholding, the IRS says that's a trust fund. As the employer, you are the trustee, and you're holding this in trust. And that is what the IRS gets really upset about, not when it doesn't get paid, because they're saying, well, that's not even your money. That was our money. And by the way, because if an employer doesn't pay that trust fund and the employee files a refund, hey, this is how much was paid in this year, what happens?
Right.
Well, the IRS gives a refund for money they didn't get.
Right.
They don't send us like, no, actually your employer didn't give us this money, so you don't get a refund. Actually, you owe us the taxes. It doesn't happen like that. They actually will give you a refund for money they didn't get. So they get a little upset about that, and they're like, well, it's really not your money. But on the other hand, look, government, you basically say that Americans are honest enough or smart enough to send in their own money. You're making someone else responsible. You know what? That's kind of your own fault. You've made this one person responsible, and and I mean, this is the thing. Businesses have cash flow problems. It can get out of control really easily. And I mean, that's really one of the things when people get in payroll problems. It's not because they were taking the money and, driving to Bermuda.
Yeah. I mean, you guys have...
I don't think you could do that.
We've had a lot of clients come through the doors here with payroll tax problems.
And none of them...
98% are cash flow.
Cash flow. It's cash flow. Something happens, a lawsuit, employee embezzlement. We'll be talking about that a little bit more. A client who burns them. A natural disaster.
True.
I mean, there's, whatever reason is, and, this is where people need to think about. The people really didn't get the money. It's not like they took you took the employee's money and you took it for your own use. No, I kept it going. I didn't want to lay everybody off. That's sort of that usually the people get them in the payroll tax problems are the people who are the nicest, because they don't want to lay anybody off.
I was just thinking that.
And that's what happens. And sometimes you have to say, look, you're going to have to, sometimes, we'll talk about some of the solutions, but that might be one, because it's like, well, look, if you lay them off, you might be able to rehire them.
Right.
But if you continue down this road, you're just postponing it, and nobody, including yourself, will be around. So sometimes you have to say, okay, guys, sorry, this is what happens. This is what we're going to have to do. So that's really one of the things. It's misunderstood that these are people. Our clients are busting their butts. Not one of our clients' problem is that they're lazy.
It's true.
It's not that. They're killing themselves, and they're trying to make ends meet. And so there it is. You can either make a payroll deposit, or you can keep the lights on, and the lights stay on. Or you can pay for supplies, so maybe you can turn around it. So, when you don't make your payroll deposit, something we call like the guaranteed loan. No other bank is going to give you a loan because you're like, well, you're too risky. Well, here's a big chunk of change I could just kind of hang on to. Hopefully everything will turn around. And then I can make everyone whole.
It may or may not.
And it may not, right. And it may or may not. And it's really, it's just one of these nightmare things to go through, and especially a nightmare to go through by yourself.
Well, you know what? I think what's scary about payroll tax debts is the IRS can literally come in and padlock your front door. They can go to your customers and say, now when you make payments, the money's coming to us. All of this done without a court order, which to me is just fascinating. IRS Medic, the law offices of Parent LLP, real tax attorneys for tough tax problems.